I want to thank you all for joining. And before we start, I want to go ahead and address a couple of housekeeping items. Most likely, for those of you that are joined on the webcast live this morning, you're listening through your computer speaker system by default. If for some reason you'd like to call in using your phone, just locate the audio pane and select Use Telephone. The dial information access code will then be displayed. You also have the ability to ask questions using your questions pane. Simply type in the question and click Send. At the end of the presentation, we'll do a Q&A and take as many questions as we have time for, and they will be queued up. And then lastly, to make sure everybody's aware, the session is being recorded, so any questions you do ask will be recorded. And a copy of this session will be provided to each of you within a day for your own purposes. Of course, you're also welcome to share this with others as you see fit. So with that said, by way of introduction here, my name is Michael Brice. I'm the founder of BW Cyber Services. And the reason why we're having this webinar today is in response to a multitude of questions I've been asked in the last quarter, and questions that have come through to my company related to cybersecurity insurance. And I think there's somewhat in a knee-jerk reaction to a lot of the public activities that are happening related to breaches. And specifically, the reasons that we're seeing that people are asking these questions are actually related to requests either from senior management at the director level or, interestingly enough, from their investors. And in many instances, these executives and investors are looking to, I think, perhaps in a misdirected manner, mitigate cyber risk by implementing or obtaining cybersecurity insurance. So what we want to talk about today is whether or not that actually is providing a good mitigation approach, and if it is, in fact, transferring your risk. And more importantly, we want to make sure that we can educate each and every one of you on the call here on the webinar today to empower you to be able to respond to these requests in a knowledgeable manner so that you can also respond in a way that demonstrates you have an empirical understanding of the actual risk you may be transferring or being requested to transfer. And in addition to that, you can quantify the cost that you can expect to incur for this risk. So with that said, I'll go ahead and jump in and provide a brief introduction of myself. As I mentioned earlier, I am the co-founder of BW Cyber Services. We are a boutique cybersecurity firm. I'll talk to that in a minute. A little bit about me, but not much, is my background is I'm a former CIO, not to confuse anybody, in the security and technology industry. CIO stands for Chief Information Officer, so please don't confuse that with Chief Investment Officer. I started my career in the military as an officer in the Marine Corps, providing cybersecurity and actually intelligence-related solutions and signals intelligence. Back then, cybersecurity really wasn't a well-known term. I was trained by the National Security Agency and worked under their umbrella for many years. Long story short, I've got about 30 years experience on both the IT and security side, doing both public solutions and government classified solutions. So if you'd like to get in touch with me for any reason after this webinar, you can see my contact information at the bottom of the page here. I would encourage you to reach out. I absolutely have a passion for this business, and one of the things that really gives me a sense of satisfaction is to be able to help and educate, whether it be my current clients or potential clients or just anyone in this industry who has questions that would like to be better educated. With that said, I'd like to go ahead and jump in briefly and talk a little bit about my company. BW Cyber Services is a boutique cybersecurity firm. We are most focused on supporting NFA and SEC registrants seeking initially compliant solutions, but more importantly, we've expanded that to also include family office and other organizations that want actual operational security solutions. At the end of the day, we're finding that the compliance side of things is actually relegated to a secondary position, and where the existential issues related to protecting yourself from a breach and protecting your customers' information from being released and preventing any kind of civil action or embarrassing reputational issue is much, much, much more important than the pure regulatory response, which we all find, I think, to be a necessary activity, but not nearly as important now based on the threat as it was in the past. With that said, our primary services focus on cybersecurity audits. Within those audits, we do risk analysis, risk assessments, due diligence, both from the investor side as well as for managers themselves. And specifically, we also include with these activities follow-on services related to penetration and vulnerability assessments, which we provide with our partner, which is TruShield, and they're on the phone here also. And the reason why we're specialized in this service is we're able to bring through the activities we do on the audits to implement and value add the penetration and vulnerability assessments to provide immediate, tangible value as opposed to coming in cold. And Paul Caiazzo in a second will talk more about his company and the services that we support with them. But one of the benefits and values that I would bring out is that BW is hyper-focused on the asset management industry. And as a result, we've developed very incisive solutions that are very cost-effective and, quite frankly, really oriented and aimed to best support anywhere from the small to mid-market managers who, by default, don't need the large or expensive or extremely complex solutions that an organization with perhaps, say, $5 billion assets under management or larger might want to employ. So before I move on, I just wanted to provide a special thank you to TruShield, who's a very tight partner of ours as we go to market, as well as Aon, who's an industry leader and can provide exceptional information on today's call. I want to thank them both for being here. And with that, turn that over to Paul, who is the CEO of TruShield.
Thanks, Michael, and thanks to the audience today for attending to learn a little bit about cybersecurity insurance that applies to the asset management industry. As Michael mentioned, I am the co-founder and CEO of TruShield, and my experience largely revolves around strategic consulting in the federal government and financial industry. Within the federal government, our experience is centered largely around the regulatory bodies that oversee the financial industry. So there's an interesting overlap there between what we see in the federal government side of the house versus what we see in the financial industry. And often what we find is that the ways that the federal government and the regulatory industry is solving these cybersecurity problems eventually become requirements for the financial industry to actually implement. So I think we're able to help kind of broker some better understanding of how those regulations might impact your operations. And I think that's really our key focus is operational cybersecurity. And I'll talk a little bit more about that a little bit later on. But my contact information is also on the screen. So if you have any questions about tactical operational cybersecurity, especially dealing with things like what malicious actors are doing both within the government and within the financial industry. We do a lot of research around that and publish a lot of content specifically about operations and threat activities that we observe via our real-time monitoring platform. And so we're able to provide some pretty interesting and unique insights into what's actually happening out in the wild, wild world of malicious actions. Just a real brief statement about what it is that we do in addition to the stuff that Michael talked about. So, we do quite a bit of strategic consulting, but really within the financial industry, our flagship service is that 24/7 monitoring and incident response capability. So as you're looking at your cybersecurity program, there's really a disconnect currently between the ability to detect threats in an environment and the ability to actually do something about it. And a lot of the stuff that Michael talked about with respect to audit and respect to regulations and NFA requirements and SEC requirements, et cetera, that's kind of the tip of the iceberg. And being able to back that up with operational capability is kind of where we make our value known to our customers. So we do 24/7 real-time monitoring for organizations, as small as a couple people all the way up to as large as 100,000 and plus people across the world. And so we're able to see a huge amount of threat traffic and a huge amount of information that's relevant to you, even within a small manager's environment. So again, we're happy to be here today and look forward to taking some questions later.
Thank you, Paul. At this point, I'd like to turn it over to Samantha Billy from Aon.
Thank you, Michael, and thank you, Paul, as well, for being part of this webinar. I'd like to say a quick thank you to all the participants joining this webinar today. We hope that you find this educational for you, as well as able to gain a little bit better understanding about cyber insurance. So as Michael mentioned, my name is Samantha Billy. I am currently a cyber broker at Aon. I work within the professional risk solutions team, which is within the financial services group at Aon. My focus is on negotiating, creating, and placing cyber programs for commercial and financial services clients. On a day-to-day basis, I help broker cyber policies that are tailored to meet our clients' needs in regards to cybersecurity risks. We help our clients through the cybersecurity risk transfer process by educating them about this emerging coverage, working with them to help highlight important cybersecurity traits through the underwriting process, and placing customized cyber policies for our clients. If you have any questions after the webinar presentation, please feel free to reach out to me. Like Michael and Paul, my contact information is below, and I'm happy to help you with any questions you may have and encourage you to reach out. As you may be aware, Aon, speak a little bit more about Aon. It is one of the largest risk management insurance and reinsurance brokerages in the world. Specifically, Aon's professional risk solutions team is a subset group within the financial services group that focuses on helping our clients with their cyber and E&O risk exposures. Our group is comprised of 50-plus experienced and dedicated professionals that work with our clients to educate them and place cyber security insurance solutions. We have professionals all over the U.S., including New York, Chicago, Denver, and San Francisco, but additionally also all over the world, including London and Bermuda. In addition to our brokerage staff, we have an experienced claims team that has worked with our clients on over 500-plus cyber claims and experience with that and working through the process there. So that's just a little bit about Aon and ourselves. I'll just real quickly get started in discussing today's webinar goals. For today's webinar, we seek to hopefully help you provide a little bit more insight and information to gain a better understanding about cybersecurity insurance, specifically for the financial services industry. As Michael mentioned, the two most frequent and main questions that you guys are asking and that's being asked of you are, how do I transfer my cyber risk? And secondly, how do I respond to a board member or investor that inquires about cyber insurance? Yet these questions tend to be a little bit more complicated than a simple yes or no answer. Thus, for today's webinar, we look to achieve the 5 following goals or objectives to help you gain a better understanding about how to transfer your cyber risk and how to respond to investors or board members that may have questions about cyber solutions and policy and insurance in this space. The first question is, how do I determine if you need cybersecurity insurance? E.g., will it transfer the risk you identify as financially viable manner? Secondly, who to work with if you decide you need to purchase a policy? Third, how to respond to an investor or executive who either expresses interest in the need for a cyber policy or wants to require a manager to buy a policy. Next is demystify the most critical components that all policies should address, including the real costs. And lastly, we look to answer the questions around the factors needed prior to and after obtaining a cyber policy. So let's get started with this goal and to start whether or not you need to purchase a policy. I'm sure some of you are wondering and deciding and looking into whether or not it's important to get a cyber policy in the first place. As a financial services organization, there are 3 reasons to consider purchasing a cyber policy. First off, you have PII, or personally identifiable information. This is the data that could be used to identify individuals in a unique manner, such as social security numbers and bank account information. Cyber policies will help cover the costs associated with the failure to protect personally identifiable information due to a cyber event, such as the first-party costs that you incur, as well as the third-party financial loss associated with the breach of this information. Not only do cyber and security policies cover the breach of personally identifiable information, but they also cover the costs associated with the loss of other confidential information, including PCI. PCI is payment card information, or the loss of credit card information as well. Next, cyber policies can cover crisis management or reputational expenses. If a bad actor or a hacker were to breach your network system, financial services companies would incur and do initial damage control in order to help mitigate the potential damages related to the cyber breach. Not only would these companies seek to mitigate the potential damages for the customer, but also to help mitigate the potential reputational harm that can stem from the breach, even when they're hitting the news. The costs that you first incur to do damage control of a cyber event are the crisis management reputational expenses associated. Cyber policies would help cover these initial costs and help mitigate the potential damages related to a breach, such as hiring a PR or public relations consultant to help work through the breach and mitigate the potential reputational harm. And lastly, the regulatory and civil action. Cyber policies can help with these potential costs. Your clients suffer financial loss due to your cybersecurity breach. Thus, they may bring a suit or a claim against you for the financial loss that they incurred or suffered due to your cyber event. Cyber insurance can help with covering the defense costs and the damages associated with such a claim and coming from the cyber event, whether network security or privacy event. Additionally, we have seen increased action from regulatory bodies in regards to protecting individual information. Regulatory bodies, such as the FTC, have been bringing regulatory proceedings against clients and assessing fines or penalties due to the loss of confidential information or not protecting personally identifiable info. Cyber policies can cover such loss related to a regulatory proceeding. Now next, many of you may be wondering what is covered in a cyber policy and what is not covered in a cybersecurity policy. Let's first start off with the cyber policies, what is covered and the financial loss that may be covered. First are the regulatory fines and penalties. As mentioned previously, there has been increased focus from regulatory bodies around protecting confidential information. If a regulatory body were to assess a fine or a penalty onto you due to your lack of protecting their information or your cybersecurity breach, carriers can help cover these costs. Additionally, if you were to have litigation against your company stemming from a cybersecurity breach, there is coverage for these costs. If you incur damages, such as settlement costs and other related, and defense costs due to a suit from the financial loss of a third party, cyber policies would cover this as well. Next, and what we find to be a big driver of cyber policies, is the data breach expenses or the reputational expenses. First-party costs that you may incur right after the breach in order to help mitigate. We have seen cyber policies pay out time and time again, and these be one of the bigger exposures for clients. These are the costs to help mitigate the potential damage once you figure out the cyber breach and to help decrease the potential reputational harm related to the incident. A new emerging coverage in the cybersecurity space is business interruption coverage. This is the coverage in which carriers will cover the costs associated with you getting back up and running due to a material interruption from a network security event and help you get up after a period of time. Lastly is cyber extortion coverage. This is a cost associated to protect against the cyber or privacy threat against your company. Ransomware is an emerging cyber extortion event that has been on the rise over the past couple of months to a year. Michael, would you like to explain a little bit more about ransomware and their potential effects?
Yeah, certainly, Samantha. One thing that we keep getting asked about, and it's clearly the flavor of the day, is the threat from ransomware. And ransomware is a very clear and present danger, and it has some nefarious side effects. However, from an insurance perspective, for the majority of the listeners on the attendees here on the webinar today, I would say your risk of exposure from cyber extortion related to ransomware, if you heard of things like CryptoLock or variants like that, is essentially 1 to 3 Bitcoins, maybe 4 Bitcoins. The prices could change, and we are seeing them go up, but right now Bitcoin is coming in around $400 per Bitcoin. So to unlock your system might be as small as $400 or as much as $1,200. So when we see policies that have a deductible, anywhere from $10,000 to $15,000, $25,000, which is standard, this wouldn't even come close. Now there may be other related costs to go with that, but they're generally relatively low. And so the point I wanted to make with cyber extortion is it's although it's very prevalent and it is a nefarious threat, from an insurance perspective, it's not terribly material. The one thing I would mention, though, is related to cyber extortion. They are now taking information, which would include PII, which would mean your policy would still kick in for other areas separate from cyber extortion. But I wanted to make sure that was understood there, because many people think of the payments that are being made and they need to be covered, and those payments, quite frankly, are not material that we're seeing so far. I hope that answers that for you, Samantha.
Yeah, thank you, Michael. It's extremely helpful. Next, we'll go into what is not covered under cyber policy. First thing that's probably not going to be covered is the operational profit protection. If your company suffers financial loss or loss of revenue as it relates to losing customers, customers not coming over to you, or customers leaving due to a cybersecurity breach, cyber insurance will not provide this coverage. However, cybersecurity policies do provide coverage, and with the costs associated, to help mitigate the potential reputational harm. It will not cover the potential with operational profit that may be lost from a cybersecurity breach. Next is cost of corrections coverage. If your system is down for a period of time due to a network security event, such as unauthorized access, unauthorized use, maybe denial of service attack, the market is in flux and you are unable to perform trades for your customers due to your system being down from such a nefarious event, these policies will not provide coverage in terms of going back for the value of the potential trade that could have been done if your system were up and running. And lastly, these policies don't do social engineering coverage. Social engineering fraud is a type of fraud that has become increasingly more common, specifically for financial services in the last years. It is a fraud. It is basically an impersonation scheme whereby a firm's money is incorrectly wired to a fraudster due to an event. However, while these frauds may transpire over email communications, this is more covered under a crime policy and not under a cyber event or cyber policy, as there was no network security event such as unauthorized access or unauthorized use into the system, and more of the customer being duped or employee being duped to transfer the money to the fraudster. Thus, if you've been hearing in the news of cyber declining these type of coverage, you should look to your crime policy for this. This coverage can be put into FI bond policies and be provided as an affirmative grant of coverage, while the coverage can be a supplement or full limits and may be subject to higher retentions, is based off the underwriting analysis of the company. So next we'll go into what the real cost of a cyber policy is. So now that you have a basic understanding of what is covered and not covered under a cyber policy, what is the real cost of purchasing this policy and how to go about it? Let's first start off with the limits. Carriers are willing to go as low or provide limits as low as $1 million. Thus, you can purchase cyber insurance policies with $1 million limits or higher. We have seen carriers do as large as $10 million from a single carrier providing this coverage. Next, for the pricing and the premium, they're usually between $10,000 price per mil or PPM to $15,000 price per mil. This is the typical price per million for cyber insurance coverage. Lastly, the retention is usually between $25,000 to $100,000. This is the amount that you would have to pay out first before the cyber insurance were to kick in. It's important to have an experienced broker help with your cyber needs and help place these cyber policies. We have seen policies have a premium as low as $5,000 price per mil. Yet, many times you will get what you pay for, and these policies have limited coverage. For example, these policies may have very limited reputational expense covered or as a supplement of this coverage, and that could be your biggest exposure. In the case of PS Chang's, their biggest exposure was this, and they did not have coverage for the PCI related. Retentions on policies can be higher and can go to $2,000 and $50,000. Yet, as the policy can become virtually non-existent because the company may not incur costs up to that point. Thus, the carrier will never start paying for the policy, and all those costs would be incurred by you. It is important to work with an experienced cyber broker that understands your cyber needs in order to make sure you do not fall for these pitfalls and get the correct cyber coverage for you.
Samantha, this is Michael. If I could interrupt real quickly here, one thing I'd like to mention in follow-up to this is that a lot of the questions that I've been asked personally over the last 3 or 4 months have been in response to policies that I've seen some of my clients purchasing from their local brokers, and normally these are boutique brokers with which they have long-term relationships, which I absolutely understand and support, but because cyber is so relatively new in both the industry, and quite frankly, there are not a lot of people even that understand it, we're seeing policies that I just don't think are in my client's best interests, and I don't think these mid-market brokers, despite their best intentions, are providing the value added that they should or would be expected of them. And this really is one of the reasons why we're performing this webinar with Aon, because of their experience from a strategic perspective and their market understanding. And one of the things that I would encourage each of you to think about, if in fact you're dealing with a local broker, to keep in mind that it's not necessarily, I would say, their fault. It's just such a new venue that it's very difficult for them to provide the same competence that they may provide with other insurances that are very well established.
Thanks, Michael. Really appreciate that and appreciate the support. So I guess to piggyback off Michael's comments, who to work with to get the best value. As Michael mentioned, cyber insurance is an emerging insurance that's in its infancy stage, meaning it's only come out for a couple of years compared to property policies that have been around for hundreds of years. This means that carriers are providing different coverages and policies are not standardized across the industry. For example, while one carrier may require you to use the specific crisis management vendor that they have a relationship with, another insurer may be less likely to take a hand-holding approach, and you may have the flexibility to pick the vendor that you would like to work with. There's that notion in the industry that cyber insurance policies don't pay out. And with our experience at Aon, with 500 plus claims that we have handled in the cyber, we have seen cyber insurers pay out on claims. Yet, when carriers are not paying out, it has more to do with outdated policy language and potential misrepresentations that are made by the clients in the application or submission process. In a case that we've seen with Cottage Health, the carrier declined coverage based on the misrepresentations that they had about their network security controls and procedures, and as well as an outdated exclusion on the policy that led to the carrier declining to provide cyber coverage. Thus, it's important to work with experienced cyber broker, and not only that, but experienced cyber vendors who can help you through this underwriting process and avoid these pitfalls early on. Cyber vendors and brokers can help work with you so that you don't misrepresent what information about your security controls in place are in applications, and making sure that the policy language and risks are catered to what your needs are. So what are the specific components of a cyber policy? Well, what makes cyber policies different from other insurance policies is that it can be broken down into two main parts. First are the third party, the costs that you incur due to a claim being made against you for the financial loss of a client or another third party. And second, the first party coverage, the expenses you incur because of a cybersecurity event. Many times insurance policies either have first party coverage or third party, but cyber is rare in the fact that it has both components. So third party coverage includes third party liability and regulatory/civil action. Essentially, these are the defense costs and the damages that you would pay out in losses or incur due to a privacy or network security claim made against you. As previously mentioned, there has been an increased focus from regulatory bodies, and this coverage would extend to regulatory proceedings. Second component, as we mentioned, is the first party coverage. Data breach mitigation expenses are part of these policies. Carriers will pay for the costs associated to do damage control in the event of a cybersecurity or a bad actor getting into the system. These costs include forensics to help understand the scope and scale of the breach, to hire a forensics firm in order to understand what had happened, how many people were affected, and what information may be compromised. Another component to this is the PR, or public relations consultant, the reputational repair. This is the person that you hire to help mitigate potential reputational harm to your company. And also includes notification expenses. These are the costs to notify your clients or customers that you have experienced a breach. These costs can be by law, based on jurisdictions and state requirements, but also voluntary if a breach and you want to make sure you're covering all your bases. Another component is the cyber extortion. As Michael and I have talked about before, this is becoming an emerging risk. Yet, while we have not seen this as the biggest payout by carriers, it is still covered under the cyber policy. The biggest exposure from a cyber extortion standpoint is the potential personally identifiable information that they can gather, which could lead to further first-party costs, such as the data breach expenses, and even further third-party liability claims, whether civil or regulatory action, made against you from further customers. As many of you are probably wondering, we now have the components of a cyber policy, but what should we do prior to purchasing a cyber policy in order to get the best coverage for yourself and from the carriers at an affordable cost to you, and making sure that everything is in place? Having a cyber audit before purchasing a policy can be crucial. This puts you in a more favorable light during the underwriting process while going to carriers, as well as helps companies more accurately articulate cybersecurity potential risks. Beyond it being a good idea in order to help with the underwriting and get you a good coverage with affordable rate, the SEC and NSA require such audits to be done. BW can provide such services and provide a cyber audit. Michael, do you want to talk a little bit about the cyber audit process? What are the benefits that can have done, and maybe some other BW cyber audit process?
Sure, absolutely. So one of the things we like to point out here is from a regulatory perspective, taking a step back, both the SEC, FINRA, and NFA are requiring that all registrants perform cyber audits. On the SEC side, they're further moving to the fact that they're saying it probably shouldn't be done in-house. You're not your own best auditor. You should have an external service entity to do that, so there's no conflict of interest. That's the price just to get into the regulatory, being compliant with regulatory requirements. For family offices, while there's no regulatory requirement, it still is not only a best practice, but I would say it's absolutely essential to make sure that you have an external entity perform that cyber audit. And basically what that audit does is it goes through a very systematic process to make sure you evaluate the critical controls and perhaps in many instances non-critical controls, but essential controls that relate to cybersecurity. And then you map those controls and the maturity of those controls against risks that are presented to your organization. And when you crosswalk those two, you come up with your primary or your high priority controls that need or represent the highest value to mitigate. And the reason for that is once you've been able as an organization to perform that activity, you then have a competence at a minimum to understand what your risks are and even more importantly to determine the value in transferring specific risks with an insurance policy. That would be the pragmatic reason why an audit is always, always critical to do before purchasing cybersecurity insurance. In support of that, though, and in follow-up to that, as Samantha mentioned earlier, some of the denials that are being seen in the industry relate all the way back to the application process and what she referred to as misrepresentations. And the reason why that's important is we found that organizations that don't go through an audit and don't really possess, we'll call it indigenous cyber competence based on at least understanding at a high level what it is and what it isn't, have filled out applications that they didn't really understand. And then when there was a breach and the basic information related on those applications was reviewed, they were found to be non-compliant. And that's where the term misrepresentation comes about. So I'd say for those two reasons, the proactive nature of a cyber audit is critical before moving forward with cybersecurity insurance. Forgive me, I could talk forever on this because I love the subject, but being respectful to everybody else here, Samantha, let's keep the webinar going.
Absolutely, thanks, and can definitely see your passion. So great. So while finding a risk transfer solution is extremely important in order to help limit your cybersecurity risk, there are potentially other measures to perform in tandem with purchasing a cyber policy to help even further mitigate cybersecurity risk, such as management security services. Paul from TruShield, would you like to talk a little bit more or speak more about other prevention services that can be performed and help further mitigate cybersecurity risks associated with companies?
Sure. So a couple points that I always try to drill home whenever we're talking about cybersecurity insurance and kind of a holistic security ecosystem of controls within your environment is that in order even for cyber insurance to be, relevant to you, you have to have first been able to detect that there's been an incident within your environment. And I think the statistics around that right now are a little frightening in terms of what the average respondee to surveys is actually capable of doing. Only 1 out of 5 organizations has any kind of capability to detect a threat within their environment. And even then, it takes a very, very long time for that threat to actually be detected. Some other statistics are that it takes about a couple of hours for almost 60% of the data that's going to be stolen from you to leave the network from the minute you've been compromised. So you really have to know very quickly that you've had a data breach as soon as possible in order to kind of stop the bleeding. And unfortunately, the average amount of time it takes to detect that there's been a breach is something like 7 months. So if you think about that, if 60% of your data is out the door within a couple of hours and you don't even learn that that happened until several months later when you may then execute your cyber insurance claim, that kind of, it's almost a so what at that point. You have to be able to more quickly react to the incidents that are happening on your network, and really to be able to do that, you've got to be able to detect. And that's where things like security information event management or SIM come into play. That's where good intrusion detection systems come into play. That's where a managed security services provider such as TruShield would come into play to help kind of navigate some of these kind of difficult waters. But I think at the end of the day, what it really boils down to is that you have to have a functional security program that's able to do that operational work of detecting threats. And then you have to ask yourself, do we know what to do once we've detected the threat? Do we have the right incident response capability? Have we written an incident response plan? But even going further than that, have we tested it? Do we have the ability to execute it? Do we understand the technical controls within our environment well enough to actually, do the job if, should the worst happen? And then, hopefully the cyber insurance will help cover some of the costs. But at the end of the day, you still have to do the work of recovering. And that's an area that I think a lot of attention's got to be placed within the asset management industry, which this is still kind of nascent science within this industry. And so that's something that I'd like for people to think about in context of their own environments. A lot of the smaller asset managers that we talk to, they either don't have in-house IT or they have somebody who came in as a consultant and set up the network for them, and it might not be possible to really retain that sort of institutional knowledge, but you really have to be able to do that in order to protect yourself well. So I always try to caution people to think about security, not just from the perspective of performing an audit, like Michael said, which is absolutely critical to do, but look at that audit as kind of a reference framework for you to understand how to mature your program well enough to be able to detect threats and then respond to them when they've actually occurred. And for most organizations, that's a very challenging thing. And I'm not even just talking small organizations. You look at some of the most prominent data breaches in history, and they're gigantic organizations that have been breached. JP Morgan Chase comes to mind. That's a company that spends upwards of $500 million on cybersecurity each year and still had that major data breach. So it's not something that even throwing money at is going to solve this problem, but really having a good trusted partner that can help solve some of these problems and work with you as that partner to help further your security posture in your ecosystem so that you can actually achieve maturity, so that you hopefully don't have to execute a claim against the cyber insurance policy, which is, I think, what everybody's goal probably is at the end of the day. Yeah, you've got to have it there as kind of the safety valve should the worst happen, and I totally agree with that, but we all hope to never have to make that phone call, right? And so in order to put yourself in that position, you've got to do the homework about what works and what doesn't work within your own environment, and then start working to kind of fill those gaps as you discover them.
Thank you, Paul. Really appreciate that insight and completely agree. So that's all we have for today in terms of prepared material. I'd like to take a moment to say a real quick thank you to all the participants for joining, and thank you to other panelists, Michael and Paul, for their invaluable insight. Michael, I'll turn it back over to you for the question and answer section of this webinar.
Yeah, certainly. Robin, I'd like to ask you, what questions might you see coming in from participants, and if we've got any, would be happy to answer those while we've got everybody on the call here.
Yeah, I do have two questions. The first one is, I'm a small asset manager with zero web presence. We don't see much of a threat to us, so why would we need cybersecurity or cyber insurance?
Paul, you mind if I take that one?
Sure, yeah.
Okay. Okay, so really good question, and I hear that a lot. And specifically, I think people equate web presence or branding with threat, and I would say that's actually not the case. And if anything, that's a threat to organizations that believe that. What we find is a lot of our clients, because of their size, make the assumption that there's no threat to them, when in fact the majority of the threat to the clients that we serve, and I would say anywhere upwards of 5 billion AUM, is more opportunistic in nature than it is strategic or directed. And by that, think about the old days when you got that email from the Nigerian prince. We've all gotten that email, and whomever was sending those out, I promise you, wasn't directing them at Michael Brice or the old email I had back then, which I think was an AOL account. It was sent out opportunistically to the world. And we're seeing that same approach happening with ransomware and other variants of it. And the reason is it's so easy to send a blast out to literally just about the entire spectrum of users. and then hope for a 0.01% chance of someone clicking on the link because they're in a hurry, they're not paying attention, or they haven't been educated. And because that can be so easily monetized, it's continuing to grow. It's a multi-billion-dollar industry now. And unfortunately, it's actually being tacitly supported by the Russian government with the mafia, or I should say organized crime in Eastern Europe, because it's a form of offensive warfare between Eastern Europe and the U.S. So I would just say that it's actually the opposite. Even though you're not on somebody's radar, you do have a high risk. And the ultimate risk to you and threat isn't just being crypto-locked, but it's the resultant reputational damage or regulatory damage if in that event you lose information and it hits the web, or there's some kind of personally identifiable information in there that becomes public.
Great, thank you. I do actually have two more questions. The next question is in regards to cyber insurance, sounding like it's a reactive plan, and what we might consider would be steps towards a proactive mitigation strategy.
Okay, I think I can take that one, Michael. I think when you look at this from, and I think that's a valid statement that there is, cyber insurance is reactive because an incident has to have occurred within the environment. And kind of as I was alluding to earlier, you prefer to never have to make that phone call. So better to prevent the incident if you possibly can, and then work from there. So when we look at the kind of your cybersecurity program, we break it into 4 different categories, which are prevention, detection, containment, and then eradication. And historically, the industry is focused heavily on prevention, trying to just stop everything from actually occurring. The problem with that is it's not really possible to be perfect from a prevention standpoint. So there's going to be some very small percentage, like Michael was alluding to with that Nigerian prince scam. Even if 0.0001% of attacks get through, you still have to be able to detect those and do something about them before they become a data breach. So proactively, when we look at this, we think first off, you've got to have a good current state assessment of where you're at right now from a capability standpoint. What security technologies do we have? Are they able to adequately protect us? A good way to do that is that penetration test, because that will assess whether or not you can withstand a concerted attack from a malicious actor. That's going to really be a good way to, in real time, kind of test whether or not your system is configured well enough to do the job. Secondly, I think there's a framework out there that is really useful for organizations that are still kind of early stage in terms of their security maturity, and that's called the SANS, that's S-A-N-S, 20 Critical Security Controls. And that's a framework that was built by an industry consortium, including guys from NSA and CIA and the financial industry, et cetera, around what are the 20 most important security controls that any environment should have. And I think it's constructed really well because it's got a maturity lifecycle really built right into it, wherein it identifies what quick wins are for each of those 20 controls, and then what kind of advanced capability looks like. So you could really plot a roadmap against that 20 critical controls to get you to like a fully mature, sustainable security posture. And that's really what proactivity is all about: is assessing yourself, kind of understanding your strengths and weaknesses, and then taking steps to shore up those weaknesses so that again, you don't have to make that phone call to Aon. You hope that you don't execute a claim against that policy. So that's where I would start. Do a current state assessment and take that approach wherein you're continuously seeking to improve your security posture.
Okay, great. We have another question. We have Steve asking. He says he believes he heard that cyber policies cover regulatory fines and penalties. And he also believes that E&O and D&O policies do not cover regulatory fines and penalties. And just he asked if we can expand on this a bit further on the cyber side.
Yeah, absolutely. So I'll take this one, Michael and Paul, if you don't mind. So regulatory policies for the cyber insurance, they first start off with potentially a regulatory proceeding due to a privacy event. If a regulatory body were to come about and the client, due to a security breach or a privacy event, thinks you are not in compliance, did not have good enough controls in place, did not protect your client's information in a way that is in standard compliance, regulatory body can assess a fine, do a proceeding and assess a fine or penalty onto the insurer. We've seen them be very little as 10 to 20 grand, but over the past couple of months, we've increased them and actually seen one as high as 500,000 fine or penalty. For D&O and E&O, I'm not sure where a D&O expert as there, but we do see that from the cyber side of things.
Great. I do have another question that's directed towards Samantha. They're just asking if you can speak to the pricing tree for additional insurance. The higher tiers seem to be priced higher than the lower tiers, and will this change in the future?
Hi. Yeah. Thank you. Whoever asked the question, can you please talk what you mean by pricing tree and the tiers? Apologies if I'm missing something.
Samantha, this is Michael. I've seen
Yeah.
something like that, and I'll clarify while they're perhaps typing to Robin. I think the issue is in some instances, I've actually seen policies that are coming in at, say, 5K per million, and others that are coming in as upwards of 15K plus. And I think their question is, you know, those 5K policies, at least what I've seen, are the mid-market policies of the lesser-known insurers. And maybe you can speak to that. Because I know in the past we've talked about the difference between some of these cyber insurers that have just popped up in the last 5 or 10 years versus others that are being provided by established insurance companies.
Oh, yes, thank you. Appreciate that clarification. Yeah, so I think, as Michael was saying, we have seen policies be as low as $5,000, and then policies being worth $15,000. So there are new entrants and insurers into the space every year, and some of these new insurers have not established themselves from their claims capabilities, as well as handling the process with clients and partnerships showing this. So one of the ways that they try to get clients is maybe decreasing the pricing and others, but you also might have an increased retention. So you have to be careful because it is a combination of multiple factors. If you have a 5K policy with a tier 2 carrier who does not do a lot of cyber insurance, can't work with you, does not have the right rates, you might have an extremely high retention where you won't even make it up to have the carrier pay out, or their coverage might not be all the way there. They might have outdated exclusions as well as sublimits, meaning they will not pay the full policy limit to coverages that mostly matter to you, such as the data breach or reputational risk. So these tier 1 carriers, while they may cost a little more, and not necessarily so, these policies are underwritten to the risk of the client, so it's important to have these cyber audits as well as these prevention methods to show that you're doing which leads to a lower premium on the back end. But it's been careful to work with who you're working with in these partnerships. Hopefully that answered the question.
Great. Michael, we did have a question specifically for you. Do you see clients trying a check-the-box plan for cyber like they did for disaster recovery?
Oh, yeah. And I got to be careful here because I've got some strong opinions on this. I'm seeing what we call the paper tiger, which is people who are doing either in-house or hiring some interesting cybersecurity firms to basically provide what would be a $500 paper solution that they stick in their file box and to wait for the NFA to show up or the SEC to show up and hand it to them. And I would say those check-the-box approaches are false sense of security and actually represent an increased liability. And based on that, I think that's also how, you know, companies and organizations, if they're then bullied into getting cybersecurity insurance by an investor or procuring an insurance policy to allay investor fears, are putting themselves at risk for being denied based on misrepresentations.
Great, thank you.
Hopefully that answers the question, Rob. Yep.
We did get one more question in. What are some of the minimum security measures to have in place in order to have a policy?
Paul, I'm going to address this and I'm going to let you follow up on it. If that's okay, Samantha, because this question could take hours. You know, there are industry best practices that start with virus protection and email filtering. The key here, I think, in terms of the minimum, gets beyond just industry best practices. It's the fact that those practices are documented, they're policies that support them. They're, again, the basic things related to passwords are complex and changed every 3 months. You know, that you have segregation of critical data or crown jewel data, escalation of privileges, certain levels of encryption, encrypted travel communications, and testing, you know, pen testing. I think all of these actually now are somewhat the basic level of entry. But on top of all of that, where we're seeing where a lot of the individuals we're dealing with are still delaying, and I'm not saying delaying is bad, and that is documenting the policies that describe what these activities are. And my basic rule of thumb, and this just goes back to my days in the military, is that if it's not written down, it doesn't count. And so if your organization is 3, 4, or 5 people, there's really no need to document these policies for now. We know you're going to follow them, and I think the governance organizations are going to come in. If you can speak to them, then you're fine. But you really get into a lot of danger if and when you start to grow and you start getting a lot of investment. We see organizations when they go from 100 million to 700 million or $1 billion plus and don't update their policies, start hiring people, get more complex. And what they've done is they've just put themselves in a situation to get in a lot of trouble because the things that they think they're doing don't keep happening because there's nobody managing it. It's not written down. Paul, I'll leave it to you to kind of further articulate on that.
I would completely agree with that. I think a lot of times, and I think this actually kind of piggybacks to the earlier question around check-the-box approach. I think a lot of people do have that check-the-box approach with respect to security, and it's to their own detriment. I think people, they look at this as almost a distraction from their core business of, you know, asset management, and I understand that, but I think that there are some significant risks that if you don't do this job correctly, you could be setting yourselves up for failure in the future. In terms of some of the key controls that have to be in place in order to really be, you know, secure, I would hearken back to that SANS 20 critical security controls. Some of the key ones on there are obviously things like, you know, firewalls and IDSs and antivirus. But I think one of the ones that's most important that's often overlooked is something called configuration baselines, wherein your devices are configured to a secure standard. They're locked down in terms of who can access them and what sort of security context the users operate in. So, you know, as I think a basic example, you shouldn't have administrator access to your local machine if you don't absolutely require it, because what will happen then is, let's say you accidentally download that ransomware agent that Michael talked about earlier. It's going to execute as the administrator if you're an administrator, and that means it's going to be able to do whatever the heck it wants to do. And so that's an area where people can take steps now to really help protect their own environments by just limiting the amount of access you have within the space. Other recommendations that I usually give to people that are looking at this from a, you know, again, kind of a early stage perspective is simply just around password control. Password control is one of those things that's it's easy to get right, but it's also easy to get wrong. And I think a lot of times that's simply because people don't have the right guidance. So obviously complex passwords include, you know, upper lowercase characters, special characters, letters and numbers. But then I think the more important aspect of password control, and this is something you'll find in like the SANS 20 critical security controls, is to not reuse passwords across different systems. So, you know, for instance, your Facebook password should not be the same password to your corporate network. And if it is and it's exposed out at Facebook, then very likely that somebody could pivot into your environment. So that's, you know, it sounds basic, but a lot of organizations don't implement controls to enforce that sort of thing, and people don't usually do the due diligence within their own behavior to, you know, better protect themselves. So I would suggest anybody really looking at, you know, what are the key controls that you've got to implement to protect yourself, start at that SANS 20 critical security controls and just work your way down the list. And if you can implement some kind of maturity around all 20, you're going to be pretty well off.
Great, Paul. Thank you very much. Robin and Samantha, we're coming up on our 1-hour deadline here, so I would like to thank both TruShield and Aon for being a part of this webinar and for the time and effort they've put in to help educate everybody. I'd like to thank all the participants for joining. Again, if you all have any questions, whether it's for me, for Paul, or for Samantha, please feel free to reach out. We're going to send you a copy of this webinar, and you're welcome to share it with others. But again, I'd encourage you to call us all directly if you have any questions. We all enjoy this and would be happy to help you. With that said, thank you all very much and have a great day.
Thanks, everyone.